Hey, top of the afternoon there, traders. This is Chris Keene from A Keen Point of View, and this is Currency Wrap. We're going to take a look at most of the majors and the EURJPY to take a look at what we can maybe look forward to in Asian, European, and early North American trading tomorrow. Let's start off with the EURUSD. You can see the EURUSD has slowly, gradually been climbing higher since about the middle of November, and the pair is basically, though, is still just sitting in a larger range between 127 and what I initially thought would be the top of the range was about 133. But the pair did break above that level and looked as though it could have been heading towards 135, which on a longer term chart, which I don't even know if I could get it onto the screen where you'd be able to see what I'm talking about, but on a longer term chart, if we go all the way from the highs that occurred in April of 2011 around 150 down to the lows that occurred around 120.60 in August, the 50 fib from that entire move would come in right around 135. So it looks like a nice target for the pair to be shooting for, but it doesn't look like it had the mojo to make a run for that, and there really was no fundamental catalyst for the move, except that pairs were basically not trading on fear anymore, but rather on the general market conditions of the individual economy, even though most of Europe looks as though it's heading into, or as is, in a recession. Anyways, that's neither here nor there. Let's look at the technicals. But you can see, so the EURUSD bounced up higher into the end of last week, and it continued to break above the 133 level, and it made it up to about 134. But now it's lost a little bit of its steam. What I'm going to be watching for from this point on is to see if it can remain above or below this level. If we get a solid close below this 132.86. What I'm going to be watching for is this 132.50 level. This is the zone, congestion zone, what I'm going to call it, between 133 and 132.50. If we get a break back above the 133 level, we could be on our way back up towards the 134 and 135 level. If we break back below this congestion zone at 132.50, we could probably cycle back down towards 130.140, followed by 130. I'm not saying it's going to be a straight line in either direction, but that would be the bigger, longer term targets. The next pair we're going to look at is the Great Britain USD, and this pair has traded very interestingly today, because you can see the cross broke below the bottom of its fib range, which was coming in, the 0.618 fib was coming in around 160.20, and it also, more importantly, broke below this ascending trend line that the cross had been riding higher. Let's see if we can get that on with daily chart, riding higher for since the middle of last year, from the low down at 152.75, and you see the pair had tested this range not once, twice, but 3-4 times, and now the cross is trying to close for the day below that level. If we get a close below this level and a little bit of momentum, we could definitely see a cycle lower, and the first target on any move lower would be about the 159 level, followed by the 157.38 level, and those would be fib levels from a larger move. Or more importantly, I would be watching for a move down towards this 158.20 level, which could definitely find buyers emerging around there. So it's going to be very important to see the close here around this 160.10 level, and to see what kind of price action we can get there, to see if we can jump in on a trade in either way. Next pair we're going to watch is the Aussie USD, because there is data coming out tonight. I think it's the employment report, and that could get a little bit of volatility and get us out of this slow gradual drift to nowhere, which we're basically just sliding sideways, gradually moving higher. The pairs moved from 103.50 up towards the 105.6. Actually, that's a relatively strong move to the 106, but right now, over the last few trading days, it's basically been trading between 105.30 and 105.80, 105.90. It's been a 50-60 pip range. We need a break of this range, and the top of the larger range that I've been watching comes in at 106.30, and the bottom comes in at 101.50. I'd like to see a push up to this 106.30 level, and that's just an opportunity to go short, or see a break of this 105 level to try to look for a cycle lower in the 103.50 level. So I'm going to watch the volatility and let the price action tell me what it wants to do. If we get a break higher, we're going to look at resistance here on 106.30. Look maybe for a reversal. If we break that, though, we could be on our way higher, all the way to 107.50, even up to 110 in the long term. But if we break down low below this 105, well, we'll be looking for a push back down towards the bottom of the range. New Zealand also trading in a very narrow, tight range over the last few months. The top of the range is at 84.7. The bottom is at 81. Just watching the price action on either direction. We have this trend line that the pair has been riding higher if we look on a longer, riding higher since the middle of the year. So what we're going to look for is a break of this, let's say the 83.70 level. Break at 83.70 level could bring us down back for another test of the trend line around 82.10, or if we break above the 84.70 level, we'll find resistance right here at 85.60. So what I'm hoping for is to get another push up towards the trend line, maybe to go short, or a move down, a confirmed move below these lows, and then we could look for a push down towards the ascending trend line. The CAD, pretty much a pretty dull pair, dull Sally to look at lately. It's just been riding this 98.35, 98.25 range bottom here. So we have the bottom of the range at 98.25. The top is at 104. Well, we have to see a break of either this 98.80 or the 98.35 level to get things going, or 98.25, excuse me. Get back above this 98.80 level. We could cycle back up towards 99.50, 99.70, maybe even parity. But if we get, if we break below this 98.25, we could see a rather quick move down towards the 97.35, or not quick move, but we could see a target of that level. But so we're going to just watch the price action at this range, top and bottom, to see where we can get. The yen and the yen crosses have been the action so far this year, and you can see that I had a range set on the pair between 75.50 and 88.20, excuse me, and it looks, I don't know if that was 88, well, let's just say 88, 88.20, and it looks like the pair, well, it doesn't look like the pair did manage to break above that, and it came back down to test it, and test it today. It looked like it was going to fall through, but then it had bounced and recovered quite a bit, so towards the 88.50 level. So what we're going to be watching is this level. The pair, as long as the pair remains above this level at 88, the top of the old past range, we could have a move, and I'm not saying this is going to happen today, tomorrow, but over the next couple of months into this fib range. And this is the fib range that goes from the high in the pair from 621.207, and we're talking about a big range, and then down towards the 75.50 level, and the middle of that on the daily range always comes at 99, and that would be the likely target for any push over the remainder of the year. But what are we going to do with that in the short term? Let's look down on a 4-hour chart. Or like I said, we're just going to look for a hold of this 88 level, and if we can remain above that, look for a break maybe of the 89.65, and then we can see a continued move lower. If we break below the 88, though, we could definitely see a pullback, because things don't go up in a straight line, and the first level to be watching would be around the 86.80 level. Now, what does this mean for the EURJPY, which has been a interesting pair to trade lately with all the volatility it has had? The pair looks like it did move back down after testing 120 to test the 50 fib from its recent move higher at 116.80. Couldn't really find any, but it did bounce from that level. So what we're going to be watching heading into trading now is to see if the pair can break. Let's get a more focused look here. Break out of the top, break out of this fib range. If we get a break of the fib range, we could easily move back up towards the top of the 120 level. But if we do bounce here at the 0.382 fib at 117.16, we could continue to push lower, and I'd look for a break below the 50 fib to at least see a test down to the bottom. 0.618 fib, let's just say, comes in at 116. All right, everybody, currency watch and all the reports should be back and running from this point on. If you want to register, sign up for a 1-week free trial, go ahead and do now at keenpointofview.com. All right, everybody, good luck trading. Keep your trades keen and play it safe.